All right, hopefully we get some folks back. We had about 300 live. I am back. Let me know, Alan, folks, let me know if this is okay now. I'm not getting the errors this time. So I broke protocol. I always reboot this entire environment here before I start, and I did not do that today. It looks fine, correct? Okay. Really sorry, man. What? Wasted 20 minutes on that stuff. Okay, so all right, good. We'll try to get back into it. Yeah, it looks like everybody's starting to come back. We only have like 32 people, so I'll just fill in some gaps here while we're talking. Let me change over to another screen, and yeah, what I hate when that happens. That disrupts the stream so bad. I don't know how many people are going to be back on. Yeah, no joke. Yeah. Yeah, so what I was starting to talk about, and I'll go through this again today now. So there's a lot going to be going on, folks. We got a lot to deal with in these markets, and you know, S&P starting to rally back up 950 here, so we're pushing up a bit again. So there must be some chatter out there about the stimulus going. The algos are starting to pick this thing up a little bit. I'm going to go back to the other screen here, and yeah, you can see we got a little pop there in the futures. But the reality is, you know, like I've been saying, you guys are probably tired of hearing this stuff, but you know, there's not going to be a deal. And let's talk about, let's say there is a deal. So now what? If all the market's action that we've been seeing and this little bit of burst that we saw, you know, trading back up into the 3,500 handle, which that didn't last long, it's already priced in maybe as well, right? So does it even matter if it happens? You know, it seems to be just something to drive the algos and all the stuff right now. There's just what I was starting to say on the previous stream is that we're just grinding here. We're in a sideways range, and I've talked about this on probably the last 2 weeks on the video. I was shocked that we traded above some of those retracement numbers. I'll go through we'll go through the details here in a minute, but it's just, you know, these markets are in, I think, 4 or 5 videos, market enters no man land. That's where we are. It's not bullish, it's not bearish, it's just what it is. It's in this choppy range, and we just can't get out of the way, you know, and I just don't see anything that's going to cause anything to change. I mean, not with the election less than 2 weeks away. So, you know, I think I talked about this last time. Yeah. Yeah, maybe the market does know, but they sure, you know, I'm just looking at Gino's comment here. Deal or no deal before the election doesn't matter. Market knows we're getting either before or after election. I think after election, I think you might be surprised. I don't know who wins this thing. The president was actually about 4 miles from where I'm sitting right now a few days ago. Came to little Prescott, Arizona, and it was insane amount of people that were there. So I don't know if that enthusiasm matters or not, but we're going to find out what it's all about here very soon. And you know, but I think there's going to, I mentioned this, and I think in the last couple of videos, they all kind of blend together lately. But what we're really seeing here is this market could be locked in this broad range. We'll call it the 3580, the all-time high, and down to maybe 3200. That could be the range for the balance of this year. there's not a lot of metrics that are pointing that this thing is ready to break out anytime soon. So if you're a trader, this is a good thing because you're going to be able to scalp these ranges pretty good. Swing traders are going to do well. Investors are going to be frustrated, and that's a lot of what goes on in the markets most of the time anyway. I think only about 30, maybe 40% of the time the markets are actually trending on a larger scale, like on an intermediate. Right now we're not anyway. So let's go ahead and dig into some of these charts and start breaking down what's going on here. I'm going to go to the SPX, and I think I fixed my issue. If you recall last week, I wanted to go through some longer term viewpoints and talk about some things on a longer term basis, and I couldn't get back in data. I believe I got that fixed. They changed some of the data on some of the symbols and trade stations, so I've figured that out, at least for the time being. We'll see how this works out. So this is the pattern. This is we go back to September 9th. We saw the high, we traded down, we went about 9% down, we traded back to the high. Now we're right smack in the middle. I'd be willing to bet if I took a calculator and figured out the high was 35.88 and the low on this pattern was what? 32.09, right? Yeah, I'll figure this out when I'm off screen. But I bet if you took those two numbers, you folks can probably do this. Subtract 35.88 high, subtract 32.09, divide by 2, and add it to the low or the top. And I bet you we're trading right smack in the middle, give or take a little bit. We're just going to pivot down this center line of that average range. And that's most likely what we're going to see, what's going on. And I see what's the status of the trade station indicators. Trade station is, I'm very frustrated with them. Just a quick comment is that you can't even call them right now. You have to schedule appointment. I've scheduled appointment to talk to them. There's some issues with getting these things up there. And, you know, it's, I guess my brother and I were talking about this morning. Every company you deal with, everybody has an excuse. Because of COVID, we can't, whatever. You finish the sentence. Every website you go to, you name it. That's the excuse for everything, for not doing your job right now. So it's an interesting world. So I am waiting for them to get back to me on something. I've submitted some support issues with them and don't have anything back. So I will let you know. I'm very frustrated. Yeah, yeah, we are also putting a portfolio expert. I see Jay talking about that online. So we'll go through that stuff. Yeah, and I agree with you, Gino, on that. I think that's the case. So anyway, so I'm going to do my best today. I'm going to go off screen here in a minute, and I want to dig into what I wanted to do last week, was really talk about a little bit bigger picture, you know, especially with a day like today where we're waffling, you know, down 3, up 3 handles after the surge this morning. Let's dig into some longer term views on the markets. Let me go through some things I wanted to go through next week. Apologize again for the late start. Thanks, Soup. I appreciate it, man. I really do. And just for the record here, and if those of you, I know that, well, I see a lot of common names. Some of you I know are subscribers. If you really want to support us for $3.12 a day, I'm gonna put this screen up for a second, but go take that back. Hang on one second here. Go to this screen. Go and sign up for WaveTech. It's $3, $3.12 a day. You get the market grid on 170 symbols now, and you get access to 16,000 trading symbols and trading signals. And this is the best way to support this channel and to support what I'm doing, because we're working on a really super cool project right now. So I want you folks to be part of this thing and really build this out. We've got some really cool things that we're putting together. You folks know this. We're really putting a lot of elements out that are very helpful to our community, helping everybody to make money. So let's dig into this, some of these longer term charts here. So we're going to go top down, and I'm going to see how far back they'll let me go, because I want to go super deep on this. Awesome. We're all the way back to 1965. So I'm gonna make a couple changes here on the screen so you can see what we're looking at here, and we're gonna dig into some stuff that I think you'll find really interesting. This is what I wanted to do last week. Let me just take these off. Okay, awesome. So this is probably one of the more interesting patterns who's got everybody on the planet incredibly confused about where we are, especially from an Elliott viewpoint. This is going back to 2009. And I'm going to draw some things in here. This is what I wanted to show you last week. And this is the most complex pattern that I've seen in my 40 years. As a matter of fact, I was joking with a friend of mine. I need to update my nightly. I share my 40 years of experience. It's now 41. So maybe I'll go to 41. It's just kind of funny what I do. But this pattern is really important to take a look at. There's a couple things that have happened, and I'm going to go back, and you folks, there might be some of this stuff back on the channel from years ago. We used to use a company called Ustream, like Ustream. It was an IBM company. We did a show on there from around 2013 forward. It was 2013. We used to do the show on there. I wish I'd have just done YouTube back in those days. That would have been fine. But what I want to show you is something that became really clear to me going back into, and this will set up where we are on the longer term pattern. And I remember when I presented this concept and idea, which I'm going to draw in here, is that a lot of folks actually thought that maybe I had lost it, because if you recall, when the 2009 collapse happened, it was going to be, that was the end of the world, and we're going into a depression that time, if you recall. And we didn't. Of course, the Fed was the first time that they monetized some stuff. And so let me draw in this pattern here. We'll start this off. So after the 2000 high, this is what I started talking about. And it didn't seem to make any sense. And then I'll take us into the current pattern that we're in. That's this one was simple. That's all I'm going to tell you. It was easy to figure out. But this was this. I'll draw in this pattern. This decline in 2003 lows, back up at 09. We actually went, I think it was almost an exact hit. And then we came down and we retraced and we made a slightly lower low here. But what this ended up to be is this was a top of a wave 3. I could take this back further, but we'll just go starting here. This was a wave, this was a B wave, and a C wave. And what I was talking about back in around 2011 when I saw this pattern is that we were about to go into the final and fifth wave of this pattern, and that we were going to have a generational high. So those of you younger people that are out there, this next rally will be the high of all-time highs. Well, there's been the hard part in all of this stuff is figuring where the highs are. I'll just leave. I want you to understand this concept here first, okay? So this is going to be the top of a 3 right here. This is going to be an A, and then a B, and then a C wave down at the bottom here. Then we're going to do 1, 2, and then we started this wave 3. Okay, everybody got that? So let's take and go to the next level, and let's start to move this chart a little bit further. And this is where we are currently at. So I'm going to just show you the top of the 3, the A, B, C, and then let's talk about what's going here with this wave count. And you know, I see it's interesting because YouTube lets me know what a lot of my subscribers and a lot of people that are on the channel, they also let me know some of the things that you folks watch. And so I'm not going to mention anything, but there are some channels out there I think is interesting because I went said, oh, let's see what else you folks are watching. And so a lot of folks have been talking, if we go back to the 09, and we came out of this low, the Fed expanded the balance sheet, that was going to be inflation, it was all going to be the end of the world and all that kind of stuff. What we ended up with was none of the above. And now the story is that corporate debt is growing so big it's going to crush the world. And there's a problem with the corporate debt scenario that a lot of people play out there, including the likes of Ray Dalio and all these characters out there, is one of the things they haven't really talked a lot about. There is some numbers out there, but the expansion of the number of companies as well as the amount of value that's been created, and even the GDP growth that's happened over the last several years, even though it's been fairly slow for many years. When you start to look at the ratios, yeah, they're high, but you know, is it a bubble? Is it whatever? I don't know necessarily on that, but let me draw in where I think we are right now long term. Yeah, you know, corporate and household debt is high. So what? You know, this is what I always say about that. As long as you can manage the debt, it doesn't matter. You know, maybe someday when it will become maybe unmanageable. But that scenario has kept a lot of people out of the markets. So I don't buy into quite in that stuff. So it must be. So here's where I was just talking. This is the scenario I'm talking about. This is where everybody got really screwed up. I wish I could take this front end of this chart off. I'm going to see if I can try to do something here. I've not done this before, so I'll finish this off first. But now we get this. We get this, what I call, this is so we have 1, 2, 3, 4, 5, and I believe this is a 3, and then we have a wave 4 in here, which is this maybe ABC, but I think it got more complex. And what it really did was this is a giant, and you've heard this story. This is another great video out there, how this is this bugle formation, right? And I could take the time and show you the last bugle formation, which was the beginning of the next bull market. These things are bullish, not bearish. And if all of you folks that are looking at bull flags, bear flags, and all the old Edwards and McGee stuff, was trying to find the old Edwards and McGee book, and I'm gonna do a story and just do a Mythbusters. If you remember that show, it was on cable for a while, it might still be, just how ridiculous how wrong Edwards and McGee really were and most of those patterns. So if you find yourself talking about bull flags and bear flags and drawing weird trend lines that dissect different points in the chart, good luck with that. Okay, but this is a big pattern. What we're seeing though is the structural part of the markets here, and now that we're this so-called bugle formation, now we're breaking out of it. What's next? So what I believe is possible, and this is going to sound really crazy, and this goes to the I guess maybe I'm going to post it on YouTube. I put it on the Facebook group the other day. I did a mock interview. I took a Ray Dalio interview. I cut Ray out. I left the guy from Bloomberg in, and I answered questions that Ray would do. And I'm thinking about making that a series. Every time Ray Dalio's on TV, I'm going to take him out, put it on, let the guy ask me a question. I'm going to answer it. So it might be a fun thing to do. If you folks are subscribers or watching the channel, maybe that's something that'd be fun to do. I'll post this. I actually did it back in July. But the point of all this that I'm showing you here is this thing is doing something that is unexpected, which is exactly what the markets always do. No one expected that Bob Kendall was going to be right, and that I remember saying back in 2009 that this thing is going to go up. But meanwhile, the full disclosure, when we hit these different points, there were elements there that looked like that could be the top of the wave 5. Well, this is what I'm about to reveal to you here. Let me take off some of these lines so we can draw some clean ones. Is what I believe is happening, that this could actually be right over to this high, could be actually a wave 1 pattern, and we're getting into some weird super cycle thing that doesn't make sense. And I'm going to tie all this together in a minute, and then we would get a correction back somewhere like this, and then the next leg up would be through the roof forever and ever. And that sounds kind of crazy, but this pattern is so unorthodox, it would be too easy. And I guess that's my point here. How easy it is to call a top here. That's the easiest trade that's out there. Is, oh, this is a top. Yeah. I mean, how many videos can you find? That'd be an interesting game. How many videos can you find that are telling you that a major top and that the markets are going to collapse and all that stuff? How many can you find right now? And I bet you if you could get a ratio, there's more of the top, the markets are going to collapse than there are anyone talking about some weird expansion. So let me tie all this together. And I wish I actually have some charts on my phone. I need to find, I know there's a way where you can display your phone. I'd love to just bring up my phone and bring some of those elements up. But here's what's going on. When the Fed came in last spring, and I know I've said this on the channel. If you haven't watched it, watch that video. And I have the book sitting over on the table over there. which is the princes of the yen. And I think we potentially are in the early 80s in Japan, and that they have expanded the monetary base to a point where you're going to see this monster expansion. So the expectation is there's going to be inflation, the Fed wants inflation, all kinds of things. And I've become a pretty good fan of Kathy Wood. I think a lot of things she says is good. I like her strategies. I haven't had a chance to dig into her ETF, and we have a just to see what she holds in that. And but the point is that the concept that we're seeing here, and it's happening in fintech, which I'm trying to get involved in being part of that, is that there's a lot of new fintech platforms coming out that are going to make investing much more available across the thing. People that are close to me here, I have the statement that investing used to be for someone, now it's for everyone. That's because of fractional shares, zero cost trading. All these things are significant events that are happening. And I remember it wasn't that long ago, maybe back in the concept that maybe I was playing out in years ago was where's capital creation going to come from? If you don't have the capital markets, you don't have these type of elements. Where do you get the money to make things happen? Some magical printing press at a government, maybe that works. I don't know. It's been tried before. It doesn't work very good. I mean, name one good thing government's actually produced, and they didn't. Let's see, they didn't do computers. They didn't anyway. You guys get it. But this pattern, what it's saying is that they've over doubled the currency base. And originally, if you look back on videos I did back when this was happening in March, I thought, like everyone else thought, that this was a huge debasement of the currency. We're going to see a massive decline, and everything. This was a doomsday. In fact, my brother and I did a video on banking crisis 2.0. Couldn't have been more wrong. Okay, it looked like that's exactly what was going to happen. What we didn't realize when that video was done is that literally less than a week later, that the Fed was going to come in and liquefy and buy bonds and buy ETFs and buy municipals and buy whatever they needed to not backstop the market, but completely float the market, right? So we didn't know that. Then also didn't know they were going to double the amount of currency in. And I've talked a lot about this, that as long as the dollar stays in about a 10% valuation of when all this happened, as long as it doesn't drop more than about 10 or 15%, that doubling of currency adds up to a huge amount of buying capacity in the economy. And that was the plan. And when you see, I'll make a point to post this video that I did, is that when the Fed doubled that currency, that was a big event. So where's that money going to go? We know where it's going to go. You can see it. You can see when they made this move, it's been there. I've talked on some of the videos that I've done in my daily videos that they're showing you everything they're going to do, because I'm going to go from this long-term view of the markets, and we're going to talk about interest rates and the yield curve next. And then I should be done with this thing, and we'll be able to go into individual charts and stocks and what have you. We'll go into some other stuff, and we'll talk about gold too, because I've become pretty bullish on gold right now. Yeah. So Gino thinks I have a crush on Kathy Wood. I would like to meet her. I actually have a wife, so I don't have that kind of crush. But I'm impressed with her thought process. And the shame of it all, we actually probably lived not too far from each other once upon a time in the Bay Area, that we didn't cross paths. But the bottom line is that this pattern is possibly the beginning. You know, how about the S&P? I'm just going to go completely off the rails here today. How about the S&P at 7,000, 10,000 on the S&P? And that's not tomorrow, but that's over time, and we'll have to see what happens. I've seen some comments before. Maybe it doesn't matter who's president. Maybe it does. I think maybe it does, but I don't do any political satire of any form on this channel. I'm not interested in that. But what I am interested in is one of the things for sure that I will tell you. And I started in 1979 and was right at the end of Jimmy Carter's administration, and Ronald Reagan was about to come into office. And this is the thing I learned very early in my career, is that taxes matter. And a lot of what you've seen, if you go back to 2016, was tax law changes, lowering taxes. That always has the effect. In fact, in 1980, we were pushing 60%. And if you just look at the election right now, that's basically where, with all these hikes and everything, that's where Biden wants to put this thing back at 60%. Okay, that's where it was in Jimmy Carter days, and Reagan came in and changed that. And what I learned from that event from 1980 was that there is a huge element of what taxes can do, and taxes matter, and they always matter. And so right now we have a reasonably attractive tax level. That's why a lot of companies are coming here. So if that all switches around, maybe this thing goes into this bigger corrective phase. But it looks to me that I don't have any of the PPMs up here on a long-term basis, but all the PPMs are very bullish on the long term as well. So I'm going to continue down this path, because unfortunately for you folks, I didn't get to do this last week, and I've had a lot of time to think about this. So but if we start to look back, we're going to do something interesting here, and we're going to continue to look at. This goes back to 1961. Let me see. Yeah, perfect. So this goes back to 1961, and this is the potential argument. Now we're talking super long term. Okay, this is basically a 60-year chart that we're looking at, and this 4 and 5 that I just talked about, all of a sudden you can argue that this is a 1-2, and now we're in wave 3. Then we get once this wave finishes, we get a wave 4 and higher, and that's where I'm coming up with this crazy long-term projection idea. Now, you folks have only met me in the last few months. You don't know that in 1994, I warned everybody what was about to happen. They wouldn't believe, is that the market was going to go vertical into the 2000 level. They wouldn't believe me at that time either. So that's okay. I'm getting pretty old. This kind of legacy. I have some of this stuff documented, and one of the things that is happening here, because of this sharp rally back that we saw, and I realized it was engineered. I'm okay. That doesn't, and this is something important. I think also I just want to talk to everybody, because I know I don't get this kind of opportunity to go into these types of scenarios on the daily videos for 12 minutes or 15 minutes. But what we're seeing here on a long-term basis is phenomenal. I mean, there's a lot of things. I think if nothing else, out of this entire crisis we've been through this year, it is reorganizing everybody, all of us, how we think. I was just telling somebody before the show I was talking to, is that what has happened in the markets, what's happened in this country, has completely revealed a new world to me, and a vision of going forward that wasn't there before. So if nothing else, shutting things down, locking us in our homes, and having a lot of time to talk and focus on other things um, has brought in something new. But I think there is a complete restructuring, and I've said this before, some things that were out there are going to disappear completely, and they should disappear. Other things are going to do better, and there's a lot of new things. I mentioned the Kathy Woods thing. The thing that I think is important going forward, and I absolutely agree with what she said here, is this, is that when you get in, if you look back at the Great Depression, that was a time of innovation. And where we are right now, the way I see it, is we're in a moment of major innovation happening here. Not just machine learning and computers, but all types of things. Efficiencies coming into the economy that you couldn't even figure out even 5 years ago that are starting to come into play. And these are things that are going to propel the economy, the world, everything into ultimately a better place, I think. You know, once we finally figure out our indifferences and all of us can talk again and have open discussions. Right now, that's not possible. And, you know, it's there are more and more people starting to realize that having a conversation is better than hating the other side, right? There's two views of the world. In the end, everybody wants the same thing. Hopefully we'll all realize that. But this chart is telling me we're going to figure it out. That's what this chart's telling me. We're not going to go into a depression. Ray Dalio is completely wrong. I said this last week. He's completely wrong. He's so wrong, it's embarrassing. And you know, but that's what he does. You know, he's kind of a shiv for China, the best I can see. He's always talking about how great China is and how everything's going on. So, but I think there's something really big here. And I'm sorry to go into this little philosophical thing, but I have always done something, and I want to expose this community to this. You know, we've got about 700 people watching right now, which is awesome. There'll be several thousand people will watch parts of this video going forward. So hopefully I've been, but the thing that I want to bring to the community is this view of what is going on. So I do something that I've always done forever, going back into the 80s, is do what I call reverse fundamentals. So if I think this chart could go to what I just said, 7,000, 10,000 S&P, right? Then what has to happen for that to happen? And that's what we're discussing right now. What has to happen is monster innovation, efficiency, and waste going away in the markets. You know, we've already seen levels of this as you go back. So the inventory process of just in time is exactly that. If you disrupt that pattern, we've seen that disruption, right, in the pattern when we shut things down for just, you know, literally for, you know, maybe 6 weeks, things were pretty locked down. But when we did that, we saw that disruption, we saw the shortages, we saw all those things. But what's happened now, out of this, people have figured out steps to take to incrementally keep that next, if something happens again, that we don't get that full-on collapse. People are figuring that out. And just about every restaurant on the planet, you know the deal, they'll bring the stuff to your house now. They did it to survive, but it's also changed everything, right? So that's what I'm talking about. But the innovation and efficiency with money, with all types of things, you know, my vision of the world is that there's just this robo environment that learns who you are and what you are, and knows how to help you invest and to participate in the parts of the world that you actually understand. And that's really one of the most amazing things. I've always told people, you know, trade what you understand. Don't get outside of that box. So anyway, I think I'm done with that. I want to put up some real quick here. I am going to put up the I want to put up the PPMs back on for a minute, talk about those. We're going to do interest rates and gold, and then we got a late start today because of the glitch on the on the internet. So let's go ahead and put some of these things back on. I'm just going to put 3 of them on for right now. So we've got, it's interesting, these little squiggly lines. I'm going to blow it up so we can see the most recent. All right. Now I just want to look at this. I just want to look at this this pattern here, and this is where, going all the way from looking at this huge long-term environment, coming in and just starting to look at what's going on right now. And what's going on right now, and I've talked about this for a while, even going back into, if you went back and watched some of my old videos, April, May, into June, all those type of things. This once we hit this level here, once we hit August, we then entered into this big sideways correctional phase that I've been talking about, and I'm going to be stuck on it because right now the monthly charts tell us there's 2, 3, 4 months yet of this pattern before we punch out and even think about going into new high. And there is going to be some challenges. I suspect we'll trade in to the lower end of these range, which is roughly around 3,000 on the S&P. So there's a huge range right now. Let me bring this up so you can just see this. So there's a huge range. If we just look at the expectations for this month right now, the top end on the market grid is 36.25. 35.63 was R3. We printed 35.49 this month, right? So we came pretty close to an R3 print on a monthly. And then if we look right now, the STX is 3,100. So the range is about a 500 point range that is allowed up or down within the month. We are 10 days from the end of this month. As we come into November, this number is possibly, it looks like it should expand a little bit. We should start to build almost like there's a video on on the channel talking about the difference between the market grid and Bollinger Bands. Bollinger Bands are standard deviation lines. These lines are volatility lines based on market action on a look back period, and then using some Fibonacci numbers to generate what the expectations are. And especially on a monthly, there's only about a roughly 15% of the time will the market trade beyond some of these parameters that are laid out each month, each day, accordingly. You just don't get a lot of these things to break out. And so what the expectation is going to be is we're going to be in this broad range. And we're looking at November. This not only could carry into year end, but it could also be January, February before this pattern absolutely completes itself. And then it looks to me that, based on everything I'm seeing, is that we'll be able to go quite a bit higher. And so, but I just wanted, I'm glad I got that out of me, because that was stored up for about a week. I wanted to go through these long-term scenarios, just looking at the monthly graph, looking at secular trends, looking at what's likely to happen here, and then breaking it all the way down to where I just said we're into this sideways range. And this is what I do every day on the channel. Then is I'm talking about the patterns that are unfolding from the standpoint of the shorter term, from week to week to day, right? So that's covered every day on the channel. I don't get an opportunity to go into one of these huge rants on that stuff. So yeah. All right. Yeah, we're going to go through. I want to go through next. Let's take a look. I want to look at the 10-year, because I think that is going to be interesting as we go forward. We're printing up. I mentioned 813 in last night's video. We have printed 823 on the 10-year, and this thing is right against resistance. But the but is we're seeing monster acceleration on the PPMs. We're looking at a plus 1.14 on the PPM1, PPM2, 1.3. And if you're new watching this channel, these PPM stand for price, pressure, momentum. They actually measured the angle of attack or the trend, the internal trend of these markets. And right now, the short and intermediate are up, and the long term is down. It's a minus 306, which is the green line. And we're trading, that number is 814 right now. It was 813 last night with the uptick. It's flattened just a little bit. But the other thing to look at down at the very bottom, I have PPM3 down here, which is tracking that. It is very close to breaking its first derivative. When that happens, that will tell us, and I suspect that is likely to happen in November, that interest rates are going to start to move up even higher, and they're going to go somewhere between 1% on the 10-year and maybe 1.2. So I'll show you where that number comes from. So we go to the, if we look at the monthly chart, now we're going to see that we are breaking above the 10-month moving average, but it's still, this is going to be a major war zone between this 790 and 830 level. I think we kind of consolidate here, and as we come into November, which is just 10 days away, I think you're going to see these PPMs turn up. Everything's going to start to rock and roll. We've been going sideways for at least 10 months now, and this is going to tell us that rates are going to move up. And this is what I've been talking about when I post this Ray Dalio mock, Bob Kendall answering where Ray Dalio was. But you see on 7/2, on July 2nd is when I did that video. I just never posted it to the channel. But when I did that video, this is what I said. I said, the Fed wants the yield curve to steepen. I cover it intermittently on the channel. So let's take a look at the yield curve, and I'll show you exactly what I'm talking about. This here is the 10-30 spread on so this is the 30 versus the 10, and what this is telling us is that the 30 is expanding and the yield curve on the long end of the curve is going up. And I've said this multiple times since going back to probably April, that there will not be negative rates in the United States of America. There will not be any of the stuff that you see in Europe. It's not going to happen. Our banking system is different, it's structured different, and the Fed is not wanting that. They also are going to engineer this yield curve to continue to steepen. And by doing that, they're going to keep the long end of the yields going up. So what happens? What's the result of long yields going up? The results are, and I mentioned this in last night's video, the results is that we're going to see the financial institutions get a little healthier. They're going to have margin increases. You're going to see things going. So right now, the earnings that we're seeing coming out on the banks are, some good, some bad, but on balance, mostly bad. The regional banks are starting to do a little better. But the banking industry, the financials will be the next place. That will be the next rotation that's likely to come into the markets once we're through this segment that we're through post-elections and all that. So there's going to be a concentrated move toward financials. So if you're one of my institutional clients or somebody watching and any of you, but that's where you're going to want to rotate, probably to the financial sector, and that's going to give you the most play for your money on the next rotation. That's going to be the place that happens. Also, there's a lot of small and mid cap elements in that financial sector. They're not all large cap. There are large caps, but there's another element there which is also going to drive the narrative I've been telling you on the channel for a while, that there's going to be a leadership change and the small and mid will start to outperform the NASDAQ. They should even outperform the S&P. There's a lot of, we should see those sectors start to come alive. And when they come alive, that plays into the whole innovation, small companies, that's where that will happen. That's the other thing you'll know is when that starts to happen is that the next level of the economy is coming back to alive as well. Right now we know all the main parts that are happening from that standpoint, but we're not really, we haven't seen that second tier start to come on yet. And we're seeing it support, we're seeing some days bad, some days, but that's it. But this spread is telling you, and I said this, I think, in last week or in one of the videos that I did, is that they're showing you what they're doing. The Fed's book is wide open if you're paying attention. So they're telling you exactly what's going on. Yeah. So, but yeah. So anyway, let's dig in and go to next, and not there. And let's start to look at gold. I've got the monthly up, so I guess maybe I'll leave it up here. As far as the big breakout in gold, I don't see that happening just yet. Yeah, we'll get into all. You know what? You're right. I should cover the NAS. You're right. Before I go to gold. Yeah, actually, I think you're wrong, Christoph. If what happened, there is a bull market in gold, you'll see. And it won't be for what you're trying to relate back to how things used to work. Things aren't going to work that way. Gold's going to be a major hedge for a lot of stuff, and we'll see what happens. Okay, but I think the gold patterns are quite clear from that standpoint, and sometimes these things go together, and that's, I guess, my point in my big rant is things aren't going to work like they used to. They're changing. There's going to be different elements. People are going to make, there's going to be some new stuff here. But gold's got a lot of work to do before a major breakout, but it does look like it wants to move higher. So let's take, I'll go ahead and I'll go back to the NASDAQ because I do need to touch on that. So all right. Yeah, so we look at gold. We had a huge month last month. We had a we had this big downward bar. We went right into the key numbers on support. This month we've had a much smaller, we're having what's called an inside bar, and typically after an inside bar we will do two things. If we can, whatever the high of this month ends up to be will be the key pivot for gold going forward. And I'll be talking about this in the videos because I cover gold every night lately. My staples have been S&P, NASDAQ, the dollar, and gold is what I've been doing every night on the daily videos. But this is absolutely a range from, if we look at the, let me bring up the market grid on a monthly basis. The high so far 1939, R1 1941, S1 is 1849. We did not quite get to an S1 number, but we're also locked into this Fibonacci range that's up here. And one of the, like I said, I have not, I'm going to do my best to try to blow this up so you can see what these numbers are in this screen that I just put up. But a 50% is going to, and this was numbers I talked about last night, 0.382 is 1941. The other number is 1969 and 50%, and then we get up to 0.618 and up into the 2000 levels again. And I think we'll be able to start to move next month's bar. I think we'll start to see that move around there from that standpoint. I don't think we're going to break out and make a new high just yet, but we are going to start to see some positive move there. So let's break it down and go into a weekly. And this is an interesting pattern on a weekly basis. You can see we're starting to press the upper end of this 1930 is the 10-week moving average, and on the we're trading right now at right on it. 1928 is the last trade. So we close above that on Friday. We're going to move up into the higher end of the grid. You also will see that when the market grid opens updates for this coming weekend, you're going to see it start to slope back up a little bit, and it's going to push us toward that higher end of the range, 1960 to 1980. Okay. There's nothing at all on the daily charts to even look at. Yeah, see, David Paul, S1 and S2 crossover a concern? I don't think so. Hang on one second. Okay, sorry about that, folks. I am in the middle of a real estate transaction, and that was an incredibly important call, and I got off it pretty good, I think. I might have to do it one more time before the show's over. So anyway, thanks for your patience there. But yeah, it's just like just to continue on this gold story, is that we're really in the process of consolidating, and ultimately we will see a major move to the upside, but it's a ways. All right, let's so I know I went to gold, but I do want to go back to, we're going to go back to the NASDAQ here. So looking at the NASDAQ, it actually printed up to its high. This is a weekly. Now we're back in the range, and I've been talking about this as well. The big support is the 10-week moving average, 1467. That's going to be your demand line. I don't think we get much below that. I think these markets have a lot of support. S&P right around 3,400, 3,407, maybe down to 3,398. That's going to be major support at the moment. And for NASDAQ, it will be the 11,467 will be that number, this 10 line going through here. The 10 is through, if we look at the PPMs below, if we look at the PPMs, is really, they're starting to fade here, which is one of the metrics I mentioned. We're starting to see some things happen here from the standpoint of the momentum on a weekly basis is starting to fade. It's starting to fade pretty quickly, but this type of configuration, all it means is that we're going to fade back into toward the bottom end of the grid, or somewhere about there. So that's exactly where we're going to be, I guess, locked in. So same scenario, stock market's a stock market. We're going to be locked in these sideways ranges. So we are seeing, I'm going to switch over to the Dow since we went there. Dow trading down at the extremes for the weekly. It's breaking through some support levels I thought would hold, but we're down at RXT 92.71, last 92.41, so we've actually traded below that. So this has a lot to do with this surge in treasuries. And I want to tie those two things together here real quick. Yeah, somebody says the NASDAQ is fading, meaning it's going to stay in a sideways range. It's not, there's not a lot of downside in any of these of the stock market at the moment. So we'll see how it all goes. But but we look at the Dow, and the Dow selling off and the treasuries going up are completely related. I did a video probably a little bit over a week ago talking about this. And this is the sign that there's a lot of liquidation going on in the treasuries, and they're selling dollars, selling treasuries, and they're taking the money back home. So that probably means that you're going to see some positive things start to happen, maybe in some of the European markets as well. I haven't focused in on that. I need to get some focus on looking at the DAX and some other markets, just to be able to get a handle on this cash flow, because I think this treasury money that's coming out it's going somewhere, and I think it's going home. I think this is a lot, and that's why the dollar is getting weaker at the moment. So, so we're at the extreme for the week. I've been talking about a bottoming pattern. This is probably a right shoulder on the Dow. We'll see what happens here. I'll cover that as we go forward every night. But I did want to just tie the two together. Treasuries down, Dow down. That's selling of treasuries, and therefore liquidating Dow holdings. All right, I think we're getting at that stage. I've covered a lot of things I wanted to talk about. Let me go with something here. Yeah, so I put up the TLT, which is the 20-year Treasury. Yeah, the 20-year is going to be part of that scenario on the yield curve. The 20 and 30-year, all of that longer maturities are definitely going to be under pressure for sure, for absolute sure. Yeah, I see Dow selling off, Treasury going up, means stock market up, not necessarily, but longer term, like, the analysis, the stock market's already up. So some of these things are adjustments that are going on right now. I don't think that's going to be necessarily a scenario that if the Dow pretty much at an extreme, I think. I'll be digging into that every night, but I think we're pretty close to having that. Having the Dow near around the lows, and they're bidding the S&P back up 1468, 15. So we're getting a little run here. We'll flash over to the. Let's go over to this screen here real quick. You can see we're seeing some 18 handles now on the futures. So we're seeing a little upward pressure coming in here right now. Oops, didn't want to go there. Okay. All right, so let's do this. Let's open up the can of worms. Let's start bringing in some stocks. We're in the final hour of trading, so I want to get into some stocks and things like that. So it's time, folks. Give me some stock symbols. Wow. I asked for it. All right, let's hold back for a minute now. There's a lot. Give me a minute. All right, let me put a couple things together. I'll start digging into some of these symbols. All right, we'll start by digging into some of the fangs. Like those are always on top of the list. There's a lot of those, and then we'll go into some of these other symbols. There's quite a few here that I've marked down. Yeah, there may be a couple other small breaks here. I'm trying to deal with the situation. It's got to be dealt with, so bear with me. Yeah, so we'll go ahead and we'll just start off with Amazon. And this pattern on Amazon, we're down below the 10-week moving average right now, 32.02 last trade, 31.93. Probably going to continue down toward the let me broaden this up just a little bit here, toward the we're trading right. I guess we've had a low around S2 already. I don't know if we're going to get deeper into this thing, but it does look like PPMs are all rolling over. This thing is starting to roll, basically heading toward the 21-week moving average, looking at 3,045 here on Amazon. Doesn't look like much is going to help this one out. Look at a short-term daily just to see if there's anything there. Yeah, interesting. I forgot about this. If we go back, we had that RXT sell, and if you are aware of this, whenever we get a close above the market grid, it usually signals a 1 to 3 day decline. And what we're seeing here is we're in about 8 days. It also can signal the beginning of a larger top, and this will happen a lot of times. So we did have that. PPMs are flat to down on a daily. So this market's just going to continue to move down toward those levels I just mentioned on the weekly graph. So we'll do Facebook. Let's do the you know, it's always interesting. I made a comment earlier when I was going through the S&P long term, is that the markets seem to do things that are irrational. Facebook and all these guys are being attacked by the Congress, and they're going straight up. Everybody's buying them. So we've gapped above the market grid on a daily on Facebook. Let's go over to and look at the PPMs. They're just rocketing here. So Facebook looks like it's going a lot higher. Let me put something on the screen here just so we can. I just want, yeah, okay, good. There's some short term. I just put some Fibonacci projections up here. We're looking at the potential of 288, 293 on the upside right now on a short-term basis. So that's the minimum target was for 279. We've taken that out. Now we're looking at probably moving into that range. 288, 293 would be target on a short-term basis. We go over to the weekly. We're actually, this is interesting because we're above the market grid on a weekly, the extreme RXT 279.59, and that is, if we stay above there on Friday, I realize it's Wednesday, but if we close above 279, that would signal a 1 to 2 week sideways to down. We'll see how this all plays out, but PPMs look awesome here. You have plus 0.73, 1.05, 1.68. This thing on an intermediate level wants to move much higher, probably up into, you know, a full retracement. We're actually getting pretty close right now. But so this thing is looking pretty good. There's no long-term price projections, but the short term, as I mentioned, 88.93, I think were the numbers I just mentioned. Let's go to Netflix. Yeah, Netflix down. They missed pretty good. We're trading down at the lower. This is a weekly. We're trading at the low end of the market grid. Low right now, 488.25. RX STX 485.22. So we are really close to the STX number. This thing will most likely, if it gets through the 487 level where it's trading at right now, we trade under that on Friday, then we'll head for next level 430, probably 438 on this market. That this thing does not look very good from that standpoint. Let's see if there's anything on a daily. I'll try to do daily and weekly analysis on each one. Yeah, so there's actually some, this is on a daily, low targets right now from the Fibonacci projection is 473. On the downside is the min, and then it's also projecting to move down to 200-day. The 200-day moving average is at 435, but the downward projection is exactly 435.96 to 412. So there's quite a bit of downside, looks like, on Netflix at this time. And you see the PPM just roll over big time. There are major downtrends on the PPMs are forming right now. PPM 1 minus 0.78, which is pretty drastic. Just tells you the major resistance around 532, something like that. That right at where about where the high is right now. Okay, so let's continue on. We'll do Apple. It's interesting. We did get after that initial move down, going back to 10.6, 10.7, we did get some projections for Apple to move to 126 to 135. It printed just short of that 125.18. And we also, I brought this up on one video one night, 0.618 retracement was 124.76. We basically did a perfect 0.16 retracement, and now we're trading back into the Fibonacci numbers. See if I can blow those up so you can see them just a little better here. Yeah, so you can see on the screen here is that 116 is 0.382, could go down to 111, and the possibilities of trading down below that are we'll look at the weekly chart here in a second, but off the daily, 116 to 111 is where the support will be. Actually, a break under 1644, you should see 111. And you know, I know so-called, you know, iPhone 12 is coming out, and that's supposed to be a great event, but markets are fading. Here's the 10 period moving average, 116.79. That's where that's right in this level. This is a major standoff here. PPM 1's only a 0.24. It's still in trend mode, but it now says there's only a 40% chance that we're going to hold 116, and the next level is 105 on the downside, and also push the lower end of the market grid. This is weekly. You should see the market grid probably turn down after and when it updates this coming weekend. Okay, moving on. Let's go to Tesla. Tesla's right on its demand line right here. 10 period moving average 420.65. It's up 2.30. You see over on the left here that PPM 1 2.30. That tells you that we're going to hold in this range here. Let's see what the market grid numbers are. So low 1905. Yeah, you probably can buy Tesla against between 14. If you see that number, that's probably going to be a pretty good buy. Are starting to see some of the momentum burn off here, but it won't take much to turn it off. Yeah, you can see the momentum is rolling over, but it's still so substantial. The PPMs are not going to have a lot of relevance until they bleed off even further. Let's take a look at the daily. Daily, you got a nice downslope here, getting PPMs trying to turn up. We're up what 0.71 on the day. What was the low for the day? Low for the day was 22.22. See if there's anything in the market grid. S1 18.17, so we didn't quite get to that low. Upside 34 R3. So we're looking at the dailies here. There's absolutely trendless right now, but I think the trade is off of that 14 number I just mentioned. Somewhere between 16 and 14, you should be able to buy the 416, 414 on Tesla would be a good buy. It still looks like to me there's some downward pressure here, even though we're trying to bottom. Well, and I guess on the upside, the breakout range would be if it closed above 437, that would signal a bottom, and we'd start to move back up toward the 500 level. Yeah, starting to sell off the S&P again. We were up 14, now we're up 4.5, so they continue to print this thing and sling it around. All right, let's dig into outside of all the fangs. Let's see, I just got a list. Here's RKT. This thing is daily. Don't have a lot of data on that. I'm actually bringing up Portfolio Expert. Just see if we have data in on this symbol, because I can get a better view of things going on here. So bear with me a second. I'll bring this platform on if we have good data on that. Yeah, I'm just looking at this thing, and hey Jay, I know you're on there, so you might want to mark this down. This was an old symbol that was revived. We need to clean that data, so I really can't really pull anything up on that. I was hoping to bring that up, but we do have a current buy signal on this thing, and anyway, so let's go. Yeah, so as far as looking at this is the daily. I've got no indicators, not enough data. This is a problem with TradeStation, and I'm looking at our other platform. I'll bring it up, but it's just not. There's not a lot of data here, but we do see a buy. These moving averages are skewed because of what happened, but they're normalized by this point here. So there's still markets under pressure. PPMs are starting to turn down a little bit. So I don't really see, I don't know what these guys, I get it, rocket companies. I don't know what they do or anything about them. So if you know that stock, then maybe you can understand. But this doesn't, other than the fact that maybe this is a right shoulder or something, that might be about all you can pull from this. It's pretty tough, and there's even less data if I go to a weekly on this. There's nothing there. So they're not telling us anything other than we can look at the market grid and just see where that is at on a weekly. We're trading down toward extremes, 94 low. The S3, 1996. So really not much I can do with that, folks. Sorry about that. A similar one, a little more data, but the FSLY, I know a lot of people got hammered on this stock. Let me see if I can go over and see if there's anything on a daily. Yeah, that gap down caught everybody. I've seen some of the stories out there. PPMs are real negative here. A lot of overhead resistance. It's going to take, when you see a break like this, let's talk about that. That's something I can discuss here. Is when you see a break on a market like this, and what that really tells you is what it shows you here when you see this, you get a break. It takes somewhere between 8 and about 12 sessions just to cycle through. Once you get a drop, like we see this big gap, this stock is starting to become, it looks a lot of vulnerable to these gaps where it gets up to the 117. What did it get to this time? 136. It gets up into these higher levels and just gaps lower. And I've seen a lot of stocks like this. There's not a lot of history. It's a new company, and everybody gets real emotional until they start to solidify maybe the business model or get used to reporting in the public markets, whatever's going on with this symbol from a corporate viewpoint. But yeah, so on a weekly basis, you know, there's probably a fifth wave up. It slammed down. Yeah, there's really not a lot here I can help with. I need more data. What I am going to look at on the other screen now, just see if we have this in our other database. Yeah, actually this might be better. So let's bring up Portfolio Expert here, and here's a symbol. This is weekly. Still have a buy on this thing on a weekly back here at $20, so it's still long, but this pattern is set up here is one of those big flag patterns from the standpoint of you get this big wide consolidation that happens here, and then PPMs, you can see here, they're all starting to roll over a bit, but they're overall still positive. They're still, PPM 1 is above around 0.25. The PPM 2 and 3, they are rolled over, but they're still in a point where you're going to see this thing remain somewhat positive. Let me put this on a daily model here just to see what that looks like, and we can see, yeah, look at this thing got whipped, got a breakout buy 1.2, and it basically bought down here at 79 and sold it over here. Sold it at what was the open there, 91. So it made some money, but that big drop, that's going to catch anybody on that type of pattern. But PPMs are all negative. There's not a lot, just not a lot here from the standpoint of I guess I didn't realize I was right in the way of some of the stuff I'm showing, but you can see the PPMs here, they're all collapsing down. So has no short-term position, does have a longer-term position that was on way back at the $20 level, but that's about it from there. Let's look at some of these new stocks. They're trying to rally the S&P back up 1155. So we've been watching this thing trade. We're about 1226. At, like usual, we'll about 10 minutes till we'll go and watch the close on the futures, see how they're going to finish up. But yeah, Peloton is really, I think, becoming very vulnerable, that this was a topping pattern here. Like, how many of these bicycles can you sell? I think they've found that out. And now what you're looking at is that the market grid is going to be dominant here. S2, and bring that on screen so you can see that. S2 122.86, low 125. That will probably be the lower end of the range. Could print down to 118. The key level is going to be last week's low, though, which is at 122.24. So if we get through that 122 level, then you're going to see this thing actually move even further down into the grid. But I would say there's a very good chance that this symbol has topped out. Let's go to the daily, since we don't have a lot of data on this as well. I'm just looking at our other platform. Yeah, we can look at, I'll bring up Portfolio Expert again. We can bring up this chart here, and you're going to see that this thing has definitely seen where it's starting to see a top here, and the let me just go to let's go to 2-year chart. Yeah, so you're starting to see this thing top out. We still have support. We got PPM1 still very positive. PPM2 is about to break its first derivative, and so the short-term trend on this thing is definitely out from that standpoint. What is going on with this symbol, though, is there is an open position on this thing right now, and it's long, I think, here. Yeah, it's long from 69 bucks on this thing. It's still long in the last trade. This was on a short term. So if we were to convert this over to a weekly, you see the weekly trade is way back at 33 bucks. It's still long this stock, and this thing is just most likely going to consolidate, even though when I was looking at it on TradeStation, that you know we're seeing this thing starting to top out from a standpoint there. That was interesting. You guys like my background? So yeah, so Peloton's taken out on a daily. The 10, it's down into the grid. So we're definitely setting up a topping formation. PPMs are still positive, but this is just going to set up some kind of a broad trading range. Should stay above 115 on this stock. In fact, if it traded down toward 115, it'd probably get a decent bounce off of there. And yeah, so that's what's going on there. Let's take a look at, keep going through some of these. Here's another big one. I'll go through Bitcoin after this one. Here's Microsoft, and Microsoft has got a similar pattern to some of these stocks that we've looked at. It's starting to show signs that it's bottoming. We'll see if it can, but the market grid, if we look at that right now, we're trading into the trading in toward R2 217.29, high 216.92. But this thing looks like it is setting up a similar formation. It's almost looks just like the S&P, if you will. So it's very similar to that. And let's look at a weekly. Now this is interesting. Weekly has intermediate projections for a 296 on Microsoft. That's an interesting pattern, but we have a lot of work to do here. PPMs are still positive, so overall it's just like the S&P and all these, we're going to consolidate, and then there's new highs down the road in all these markets, whether it's 4 weeks, 6 weeks, or 12 weeks from now, which would be the better part of 3 months. But it does look like everything wants to continue to go higher for sure. Dustin, I really appreciate Super Chat, man. I've been off screen to see that. Okay. Yeah, I did cover the Dow. It'll be in a rebroadcast, and we go through it. I have not, Garden Chick, I have not heard about Microsoft and SpaceX partnering. That's interesting. All right, what time we're getting to be here? Half hour to go. Market just hovering around up 12, prints up to 14, back down. All right, let's do a couple more. Now here's one on Pacific Bioscience. This thing's vertical, to say the least. This is the weekly. The way this thing's trading right now, I would suspect we're close to a top and a multi-week consolidation, and the market grid's pretty broad right now. We're looking at the potential right now. Looks like we've traded to R2, just below R2, 1317, 1303 low. So we're close to an S3, not quite. But we're definitely setting up a top here, and we're likely to see a broad consolidation. Probably this week's high is going to be the high for a little bit. Look for it to trade back into at least the $12 range, maybe even down to 1050 from this standpoint. We're seeing PPMs roll over. Everything's starting to show signs that we want to see a consolidation there. Yeah, I wish I can't bring up on this platform Ether, unfortunately, but let's do Bitcoin, because I talked about that a minute ago. Bitcoin's breaking out again, 12,782. I did a interesting overview of this several weeks ago, and now S&P's now sold off from up 12 to only up 7. We'll see how this close comes out again today. Been playing this same game every day, but it's interesting. There is price objectives for Bitcoin. Now I'm going to sound like one of the hype guys out on the internet. Is 18,000 to 23,000, and this number is This number is pretty substantial from the standpoint of the pattern it's setting up. One of the things that I had talked about, I remember a number of weeks ago, if we could get a close above 12,079, that was going to be it. Well, we've definitely done that. We're doing that today. If this thing holds together, PPMs are starting to turn up, 0.84, 1.48. This could be the big one. Okay, let's take a look at, I'm not sure what we'll get on this monthly here. Yeah, not a lot. But this is the kind of breakout pattern when we get into the next month. We're going to see these numbers go up. Let's see what this high is here. 13,855 old high. Looks like we're going to challenge that number, and we get through that, then this thing's gonna rocket into new highs without a doubt. So it's interesting. That's an interesting thought, actually. This is actually an interesting thought. If we know how correlated the Bitcoin and the stock market has been, I mean, one doesn't go without the other. It's interesting that we're seeing this 5% surge in Bitcoin right now, and what that might mean for maybe stocks. Because on balance, I'm still very bullish on stocks. If you recall, I didn't bring up the WaveTech database today, but the WaveTech database is telling us that the intermediate trends are up, and that they're going to stay up into at least first, maybe into second quarter of 21. So this is substantial, and maybe Bitcoin's leading the way, but there's definitely maybe this is just like nervousness ahead of the election and all of that. Yeah, I don't know, but this is Bitcoin looks amazing, actually. Okay. Yeah, I'm just all right, let's see what time we're getting to be here. 20 minutes. We'll start to focus in on the S&P. It's only up 5 now. So they're just they're fading this thing into the close again. This is the same pattern we've seen. And I think we're going to go overnight, and there's not going to be a deal. Let's do 2 more stocks. Focus in on the S&P close. We'll go to the futures, look at level 2, to see how everything is trading. And yeah, some of these symbols, somebody just put up PLTR. Not enough data for me to actually look at this thing. I don't think it's in our system yet, so I would say I can't do a lot with that. Sorry about that. Can look at PayPal. PayPal is breaking out again. PayPal has exceeded its RXT number on a daily basis. It stays up here. We could see some backfilling. A lot of times when we're flat and we see an RXT sell, it usually suggests that we're going to see a it usually suggests we're going to see the grid actually turn up, and we'll continue to move up. This is a really pretty classic breakout, and let's go to the weekly to see what's going on here. As we look at the weekly, wow, here's the projection, a Fibonacci projection on the weekly for a high target move 302, 351. So that's a pretty crazy number. Usually when we get these kind of projections, it doesn't happen, but we're trading at the extreme of the range, and that's telling us, at least for this week, we're done. Let's go long term. Let's look at the monthly. This is a very interesting chart. Yeah, so the monthly here, the monthly is showing us this is an all-time high on PayPal, and we're trading at 215, R2 212.97. So there's more maybe for this month, maybe to trade an R3 221 there, but this thing's on a, this should be SpaceX. It's going vertical. Yeah, so that's an interesting interesting stock there. I don't know what you can do to play it right now. If we back up a little bit, it's played out for the most part, but if maybe on a long-term basis, if you're a WaveTech user, you can use WaveTech and use the weekly signals on this thing. You can probably do pretty well on that. I am actually going to, I'm going to bring that up on the other screen here. See if I can. I just want to bring up this. Yeah, this is interesting. I'm bringing up WaveTech here, and look at a couple things. On a short-term basis, we've had a new buy, but if we go over to the weekly, we got a buy in this thing on May 4th at 121. It's up 66%, 201, and PPMs have actually faded off, but this is classic. This is what I talk about. It's recycling, but the current trade right now is, it's long, though it has not been confirmed, and that's because this thing's recycled. This trend phase on the software here tells you it's not confirmed, but expect prices to move higher. The next phase will be the a 2P, and that will tell you that prices are confirmed, it's going higher. So this stock has really got a lot in it for sure. There's some really good stuff going on there. What time we got? 45. So let's do. Let's try and see if I can be efficient and get at least two more in here. Here's a Redfin. This one is a similar pattern in that we're seeing the PPMs peak out a bit here. We're coming down into major support at the 43.54 level. Should hold there. Should see a bounce from that level. So there's probably a trade off of this, off the weekly. The daily, I suspect, will look pretty negative. Yeah, so daily is exactly what I thought it would be. You got PPM1 down 166, 153. So once again, if you're a WaveTech user, I'd put Redfin in on a short-term 1.2 model and wait for that trigger to happen, and that should get you in really well off of this pattern here. It's going to take multiple days, and it could even be lower prices. right now there is downward projections on this thing for a move to 44 to 40 with the extreme of 37. So that would put us closer to 200-day moving average. I don't think we get there on this one, but we could easily see 44 to 40 range, but that should set up a bottoming pattern if this thing continues down into that range. Yeah, so look at this. They turned the S&P negative here. We're going to flop over and start paying attention to this thing here. And this is the pattern every day. Rally in the morning, sell off in the afternoon, no deal. Now that should be, maybe I'll have to use that. I have a cool icon for, I have a pretty cool icon for a deal, no deal. Remember that show that used to be on, what was his name, Howie, whatever. But this is exactly what goes on every day. And it's amazing to me that the markets get bid up every day on this so-called deal and it fades. But like I said in my Twitter account, is, you know, maybe we should be grateful that that happens, because really what we're seeing here is the opportunity to fade these rallies here. So, you know, I put on some triple Qs the other day. I also put on some the SPSX as well, and I'm kind of holding that thing. I think we're going to try to print down toward this 3,400 support to see if that thing's real or not. That's the level I'll be watching the next couple of days. We're going to come into Thursday, to me, the big day right now. Markets get, I always say this, markets are like, they can't chew gum and walk at the same time. They can only focus on one event. And I believe the event that they're focused on in the moment is the claims numbers that come out in the morning. I think that's going to drive sentiment tomorrow. We'll see how that comes in. We've been watching the continuing claims go from about, well, we watch it go from almost 21 million down to 10.01. If that thing drops under 10, then that could be bullish. We'll see what it comes up to. If it upticks a little bit, that'll be interesting. Now we're seeing some selling come in here. We're down 514 on the cash, down 225 on the S&P right now. So we're seeing some pretty good pressure here as we come into the close. Yeah, by the way, if on the market grid, the Bitcoin is on there. So that's going to be real handy for trading Bitcoin in the next, during this cycle. You're going to want to have the grid, and out of the grid, there's daily numbers, and then there's also the, matter of fact, let me, I'm going to bring it up on the other screen. I'll slide it over here in a minute. I'll bring this up in just 1 second, and we can look at the grid. So we're printing down 3 on the cash right now. As futures are flat. So I'm curious. So here's the market grid for Bitcoin. I just want to see if any of these numbers are in play. What we got here? 9 minutes to go. I'm going to flop back over to this other screen for a minute and bring up Bitcoin again. 12,000. Yeah, so we broke out of all the range, but I want to see if any of the weekly numbers are in play here on Bitcoin to see But these numbers for tomorrow, if you're trading Bitcoin, are going to be pretty useful. Yeah, we've broken through all the numbers. One last range here, monthly. Yeah, we're right at the upper end of the grid on the monthly. So if I come back over here, we're looking at the monthly grid. 12,897 is extreme, 12,403. So we actually got into the matrix. So these numbers will update today. We blew through everything. So tomorrow, after a blow through like this, these numbers are going to be really important to watch if you're trading trading this stuff. Okay, let's go to the level 2. Take a look. We're printing down $1, so we're trying to go up flat on the S&P here. We've got about 7 minutes to go. Let me get the chat line up so I can see what's going on there. Yeah, just bringing up Neo. That one usually comes up. I see some chat going on there. That basically got an RXT sell there. This thing's trying to set up. We actually satisfied just about every objective there was on this symbol. The Fibonacci's have been filled. Everything's there. The demand line is going to be 25.30. Let me look here. So tomorrow around 26.5, you can actually play this thing on the long side around 26.5. All right, going back over to the scalper here. I'll go off screen so we can start this. We can watch this close together. So those of you who watch the channel, you know that I always talk about the last 2 minutes and of trading, and then the 2 minutes after post trading. And yesterday we saw some pretty interesting action there. So it'll be interesting to see how this thing is able to finish out. Yeah, I'll do a couple stocks since we got a late start. As soon as we get through this close, I'll do a couple stocks. Yeah, not only will I do AAL, but I'll bring up, maybe I'll bring up the Warren Buffett portfolio as well. So right now it's like watching paint dry, I guess. We have 4 minutes to go. Yeah, not a lot of activity. This whole day's been kind of boring, actually. We've actually had a couple. This Wednesday seems to be a good day to do things, but we're just not getting any. Maybe we'll get some movement here in the last 2.5 minutes. Doesn't look like much at all. Yeah, VPDX. So S1, R1 all day on Apple, you're saying? Yeah, all of the XPX data, Jesse, is coming from TradeStation, which is on this platform. So we're selling off a little bit, 540 now as we come into a minute and a half to go. We're seeing some pretty decent selling pressure. What was the low of the session? 20. I know that R1 was 2017. So we're ways off of the lows of the day. Not a lot there, it looks like. Yeah, I think as far where's the bottom of this wave 3 down, I still think that there's an ABC down that's forming here. It should finish off between 3407, 3398, maybe a touch lower. And we're seeing some selling as we come in the final minute here. We're printing 30s. This is the lowest level we've been for a while, down 530, 545, $6 on the cash. So definitely see a little selling on the close here. Now this will be the key, the next 2 minutes, and then we'll go back and we'll do some stocks and we'll call it quits for the day. When I finish these live streams, I usually head for in and out, go get a triple protein style. Yeah, we're in a minor siege, is what I think. That's what I've been talking about on the channel. So, but it looks like you have to go to the hourly chart to see the breakdown. So here we are, final seconds, we're done. We traded down to 28. Now we'll see how we trade for the next 2 minutes, see if we get any short covering off of this little sell-off. So far we're printing, there we go, 31, 32 prints. 33, we're going to see 34. Definitely a little short covering on this within the first minute. Yeah, I don't think stimulus isn't coming. And if it does, who cares? No, after all this stuff we've been through with the markets, they won't even care. So if you try to buy the stimulus news, they'll slam you. All right, not much here. So we saw a little short covering, but nothing substantial there. So let's move on. Let's do a couple stocks. Yeah, so hey, Benny, that's why I always say people always want to take bets on the market. It's easy. Go long or short. You don't have to, you can bet with yourself. It's fun. Yeah, so let's take a look at a couple stocks here. I owe you folks a little bit of time because we didn't get started on time today. I agree, Josh. So I brought up EHT, which is eHealth. Stock's pretty dead. Nothing really going on here. We're below the 200. Don't know much about this one. Let's look at the weekly. Yeah. Traded down toward the 10-week moving average is actually bottom. There's your support right there. Is you're looking at 76.04. 78.08 was the low. So you can buy against the lower end of this range. Maybe you could see it trade back toward the 21. That's going to be about all you're going to get from this thing, which is maybe 86 trade. I don't think we can get up to back into the 40 period moving average or anything like that. Yeah, let's see what some of these COVID stocks are doing. mRNA. Yeah, it's interesting. Look at this. There's a Moderna. We've got a price objective of 131 men and upper end range 161, 170. So is that projecting? Is that the winner of the vaccine race? Is that who gets it? Okay. Yeah, this is interesting. I just brought up a stock that's in the chat line, INNO. I don't know if that's the right one or not. We will take a look at Disney. But there's a lot of these media companies. I can't reveal, but I do know there's some large media companies that are out there that are really struggling trying to figure out what to do with their content, streaming, all kinds of stuff. So you're going to continue to see, basically when they cancel some of these movies, they shut down the movie theaters for the rest of the year. Nothing's going to happen on these things. So Disney's kind of hovering just above its moving averages, staying above the 200-week moving average. There's not a lot here. Looks like I do have some upward objectives here. 156, maybe. Not a lot here. Nothing to really go with on this thing. I don't see anything there. Thank you, Pushpack. I will take a look at that for you. Thank you. Yeah, Digital Turbine. Yeah, this, wow. Yeah, PPM's all rolled over, but they're big numbers on the upside because there's expansion. So the number to watch for, and this is something you can do on any piece of software, is you want to watch for this 10 period moving average to come up underneath this action here. Right now it's at 30.69. It's going up $1 per week. So 32 range is going to be where you're going to see a bounce, and there'll be a trade-off of here. But this thing is setting up like a lot of these stocks that have printed up into these higher end of the ranges, where they're actually just they're topping out here. And top doesn't mean they're going to decline or collapse. It just means that they're going to set up these high level consolidations, and it will take multiple weeks before you can figure out what's going to go on with this one. All right, let's do a couple more. Yeah, I like FPDX baked chicken with cauliflower. That's pretty funny. That's a good keto meal. JPM, yes. So JPM is one of those banks that I talked about earlier when I was on my long rant about the long-term objectives for the S&P and some of those things. This would definitely be one of those stocks that you'd want to have on the list. Right now, nothing there. It's easy for me to tell you, and that's the first thing I would do is use the WaveTech tool and and put it on a weekly trading model. And when it comes up, that's exactly what I do. And all you got to do is go here, Kendall report /WaveTech, and you can sign up $3.18 a day. We actually prorate it for the balance of the month. You're looking at 21st. You're looking at $30 to check it out. But I would put JPM in on a weekly model, and that would be exactly what I would see the best way to play that. You could go on a daily model and see how it plays out, but for the most part, I think you're going to see this thing consolidate here. But 124, 136 is the upper end of this range, which would be a retest of the old all-time highs on this stock. All right. All right, I'm going to do two more. Just looking at the line here. Here's Flex. Interesting. Got an RXT weekly sell last week. Should see 2 weeks sideways to down, print down toward the bottom end of the market grid range. So that's looking at potential of going down to not a lot, 1286, 1250, down in that range. PPMs are still very positive, so this thing's in an uptrend, but you're going to see it print down for a couple weeks, probably two weeks sideways to down, and then a resumption. Upward targets right now are a minimum of 1624, but upper end range 1880 to 2039 would be the upward range. Yeah, so somebody's saying Tesla's up 4% right now. I can't show you the actual trading, but you can see up at the top here, it's up 4%, up 16, 17 handles. But it goes to what I was talking about earlier, that it's going to, you want to buy off of this 10 period moving average on the weekly. That number is, where is it? 420.46, the low 419.05. If you'd have bought it off of there, you'd be up some nice money right now, 16 bucks. Yeah, we talked about that earlier. That's a place where you want to play that. That 10 demand line with a plus ppm of 2.5 is all you need to know for that trade. And there are longer term objectives for Tesla. 561 min, 672, 740 on Tesla. I want to see if I'm going to go down. I want to look at the market grid for today. So Tesla S1 418.17, see low 411, 413. So we traded an S2 today on the daily grid. And it's interesting that S3 on the weekly grid is 414. So we traded down into these support ranges here. So, and now we're trading what, 37? So all of a sudden we're trading RX on the daily right now. If I could update, if this chart would update, we went from an S2, just below S2, to an RX number for today. So if you were looking to, yeah, I covered this earlier, and that was exactly the buy against that 10. I think I put it out there at 14 would be the perfect buy. The 10 was a good place to buy that. Yeah, exactly. No, the low is 421.25. I'm looking at a weekly graph. So if we go over here, hang on. Yeah, 421.25. Yep. But here's those upward numbers, actually, even on Tesla on the daily, looking for 503, 540, 563. So this thing wants to break out of here. You're seeing PPMs turning up, all that good stuff. So I'm ready to call it quits. There's an In-N-Out burger in my future, and it's been great. I apologize again for those of you who hung out for the whole show that we got a late start. I have no idea what was going on, but I did break protocol. I didn't reboot before I start the show. I always start off on a clean slate, as they say. Somebody did ask for American Airlines, and this thing just keeps hovering sideways. I want to go weekly. So weekly has got a price objective for American for a range up to 25, 26 to 20, as high as 34.25. That's going to be it. Yeah, Josh, and I wish that the Neo Shake, I don't know what that is. So, but I doubt if anything to do with shakes will be keto friendly. All right, folks, come back on screen. Thank you for showing up. Thanks for all the time and everything that we did today. Hopefully we covered a lot of stuff that you guys wanted to cover. And I should have made this announcement early, but next week's broadcast is going to start a bit later. It's going to start an hour and a half later. I'm actually speaking at a symposium on Wednesday of next week. And so the only way they could get me on schedule was pretty much when we're doing the live stream. So I will be late, but we'll do the last hour together, maybe a little bit, and then we'll be back hopefully on schedule the following week. So I'll make sure everybody knows that. I'll talk about it on my Tuesday night's video next week. All right, man. So appreciate it, and thanks again for watching. Yeah, I would like to broadcast a symposium, but I can't be against the policies that I signed off on. See you, folks. Hey, like smasher. I like button smasher. I wish you would have brought that up. I would have loved to go through Peter Schiff's issues. That would have been very interesting. I was actually talking about that pre-show. Wish that would have come up. Yeah, I Garden Chick, you have no idea. I met him in Dallas several years ago, and man, what a jerk. He's everything you think he is. But yeah, and if you look at his mutual funds, he doesn't have very much money, and they're terrible anyway. Man, I wish somebody had brought that up. I would have loved to talk about that. I'm going to check out, though. All right, folks, thanks again.